You are welcome to Company and Partnership Law class. Today, you will look at Section 3 of Unit 1. Unit 1 is on partnership law in Ghana. Section 3 of Unit 1 is on characteristics features of partnership in Ghana. Session objectives. By the end of this session, you should be able to explain the consequences of incorporation of partnership firm, evaluate the issues of taxation in partnership firm, and assess the liabilities of partners in a partnership firm. The consequences of incorporation of the firm. Now the first one has to do with separate legal entity. When a partnership firm is incorporated, it becomes a separate legal entity distinct from those who form or incorporated a partnership firm. It can seal and it can be sealed. The partnership firm will have a common seal under which it will transact its transactions. The next point is powers. When a partnership firm is duly incorporated, it is capable of exercising all the powers that can be exercised by a natural person, subject to the provisions of Act 152. Every partner is entitled to participate in the management of the partnership firm. The decisions in the partnership firm are taken by the partners. However, this is done on majority basis. So if there's a decision to be taken, the majority decision is what the partnership firm is going to take. Now, you should know that no partner will be allowed to introduce another member or another person as a partner without the consent of the other partners. Now, another feature is the perpetual existence. With perpetual existence, we mean that a partnership firm will continue to be a body corporate until it is finally dissolved. It means that once the partnership firm is not dissolved, the partnership firm will presume that it is in existence. Now, the last point will be on liabilities of the partnership firm. A partnership firm may be liable for the acts done by the partners in the course of their duty. That any authorized acts by a partner will bind the partnership firm. You should also know that even though the partnership firm is a separate legal entity, the partners are jointly and severally liable for the liabilities of the partnership firm. And where a partner incurs certain expenses in relation or to the benefit of the partnership firm, he or she will be entitled to be indemnified from the partnership firm and possibly the co-partners. Now, you should also know that the liabilities of an existing partner will differ from that of new partner or a retired partner. An existing partner will be liable for all the liabilities of the partnership firm. However, a retired partner will only be liable for the liabilities incurred by the partnership firm whilst he or she was a member or a partner of the partnership firm, not the liabilities of the partnership firm after he or she has ceased to be a partner, especially beyond 1 year. A new partner or a person who has been admitted into the partnership firm will not be liable for the liabilities incurred by the partnership firm before he or she joined the partnership firm, unless otherwise agreed by him or her voluntarily. Also, whereby a person hold himself or herself as a partner, the law will hold him or her as such, and he will be liable as a partner. Now, on publication of firm name and partners, the law requires that every firm shall carry on business only under a registered firm name. The key word here is a registered firm name. It means that you cannot carry on a partnership business if you don't have a registered firm name, and shall paint or affix and keep painted or affixed the registered firm name on the outside of every office or place in which its business is carried in a conspicuously position in letters easily legible. What it means that the name of the the name of the partnership firm must be seen in the places where the partnership firm carries on business, especially where the offices are. Where the partnership firm defaults in complying with the above provision, the partnership firm will be liable to pay a prescribed fee. Now, issues of taxation. You should note that the partnership itself is not subject to income tax on its chargeable income. The ordinary rules as to taxation of the income of taxable person apply with each partner being assessed for tax separately from the other partners. Now, what this means is that when a partnership firm has a chargeable income, and a chargeable income can be, to calculate the chargeable income, you have to get all your accessible income and you deduct all permitted expenses from it. So the accessible income is just about your income from employment, income from business, and income from investment. So the income of the partnership firm from all these three sources, when you add that, is what you are going to get the accessible income. Then you deduct all your permitted deductions. Before an expenses can be deducted, it should meet the test that is stated in section 9, subsection 1 of Income Tax Act 2015 Act 896. They will state that an expense will be deductible if it is wholly, exclusively, and necessarily incurred in the production of income. Now, if you move forward, you will see that even though the partnership firm is not entitled to or is not liable to pay tax on its chargeable income, but the partnership firm is liable to pay withholding tax, and it can be seen under section 52 subsection 1 of the Income Tax Act 2015 Act 896 as amended. Now, when the partners share their profits, then they will go ahead and pay their taxes on the graduated rate. Now, you also have general and limited partners. A general partner is a partner who takes control of day-to-day management of the partnership firm. A limited partner does not take control of the day-to-day management of the partnership firm. the partner has a limited duty in terms of the management of the partnership firm. Now, an incorporated partnership firm must have at least one general partner and not more than 20 general partners, and it should also get at least one limited partner. So there should be a mixture of general partners and limited partners in a partnership firm. But in the case of general partners, there should not be more than 20 partners, and obviously from 1 up to 20 will be okay. For limited partners, there is no limit for them. I believe you have enjoyed the lesson. By way of summary, you have explained in this session the characteristic features of partnership firm. You have also examined the liabilities of partners. We also dealt with publication of partners' name and taxation. We highlighted that a partnership firm should have at least one general partner and not more than 20 general partners. We went ahead to state that a partnership firm should have at least one limited partner. Thank you very much for your time. See you in the next session. Goodbye.